Hello guys, in this video I will try just to explain why swing traders, because we are speaking about swing trading right now, don't see the trend, okay? And why they see it just at the end when it is big and when it is seen. This is something related to techniques to find the trend, because most of the time when the trend begins there are some signs. So when you know these techniques you can spot the trend before it comes big. So I will just give you just an example, okay? So let's say with the explanation, okay? Okay, so let's say I will show you something right now. Let's say the stock is doing like this, okay? Now, when you see a stock like this, most of the time it's trending into a range. It means it goes up, it stops, it goes down, then it stops. Now, whenever it stops, it means there is no more sellers. So here, this action is selling, either selling short or selling, it is selling off. It means people, they sell their shares, plus it is selling short. It means short sellers selling short, which is two actions, selling short. Now, if the stock is going up, we have more buyers than sellers, short sellers. We have more, it is strong. So we have this action, buyers versus, which is going up strongly, okay? And then we have selling off and short sellers. The stock will play like this for 1 month, 2 months, 6 months, 1 year. It can go everywhere. But one time the stock continues to go up, and then it can go up until it reaches here. Now, in this section here that I show you, this is the problem. In this section here, where the stock is strong and it begins to go up, although this one, second, third, fourth are the same as this one, but this one should be different in the way it looks like. It should be different than this. And now when it's going up and on the top here, and you can see here, we can put a diagram like this. It means when it's going up like this, all this, what the beginners do, okay? This is what the beginners do. The beginners, they don't want to buy at any stage, either here or here or here. So all this here, it is a no buy by beginners. No buy. It means they look at it, they can look at it, they find the stock. Let's say beginners find the stock at the beginning here. So they know, for example, this stock is called XYZ. This is just a fictitious stock, right? So it's not true. Now, so the beginners, because they want something sure, they want something that it is sure, they buy, they make money. They have no risk appetite. It means they don't want to risk. And this is almost all beginners' state of mind. No risk. He wants that he finds something which is sure. So what does they do? They don't buy when they see a trend, beginning of the trend. They will never buy it. But when it reaches this section here, at the end here, what they do, they buy. Now, why they buy? They buy because they see the very, very long trend and they begin to calculate their profits. And they say, oh, what if I buy here, the stock was $10, and now I sell here, the stock is $70. How much I make? They begin to calculate their profits, although this is the past. This will never come back again. Because the beginners, they don't buy from the beginning, they buy from the end. And there is another thing that I will tell you guys, if you are beginners, or even if you are intermediate, or even you are advanced trader, especially short-term trader, which are swing traders, following trends, okay? This idea is, most of the beginners, they watch TV. This is the most important thing, to watch TV. This is the problem. Because TV shows you only when the trend ends, because they will ask you to buy because of this performance. Now, why they ask you to buy? They ask you to buy because there are mutual funds and hedge funds, they are selling. So beginners will be like the victim of TV. Victim, because they ask you to buy and you believe them. So you are victims of TV. You believe that someone else knows the future. But in TV, they do it purposely. It means they know what they are doing. When they ask you to buy, it means there is something behind. It may be someone is selling. Because they are not stupid. When mutual fund is buying here, they ask beginners to buy here. They are not stupid to do this, because they don't want you to make the money. They want you just to help them exit safely without losing too much. Because when the mutual fund become to sell, the stock will go down like this. And it might be going to $10 after a few months. Because they begin to sell, other people sell. All these people have profit. Mostly all these are professional, are mutual funds, are hedge funds, and good traders. All this, they are here. But you come here at the end, and you begin to see that you are losing money, and you stay. Some people, beginners, they can lose all their money. Okay? So this, it is just to understand what's going on in the stock market. Stock market, especially when you go to TV, try to be careful of the news they give you, especially when they ask you to buy or to hold or to sell. There are some people who think that some people online, they are like gods. They know the future. And I see some, I'm not telling names, but I'm looking at some analysts. Oh, this? Oh, it's a strong buy. No, this, just hold. The other one, oh, sell. The company is bad. But other people, they don't know what's going on in this market, which is full of secrets. You will never know what's going on. Okay? And then when you follow these guys, either online or in YouTube or in websites or in chat rooms or in wherever you follow this kind of people, and the problem is you end up losing all your money. So what is the best thing you can do is to get a training, is to practice by yourself. You search for techniques and you develop rules to know when the trend will begin. Okay? Or at least you buy when it is in the middle, when the trend has already begun, but it is seen little bit, not too much, because I showed the other time a stock which is called Square. It was $5. Now it is 85. I told them that this is, if you didn't buy from the beginning, okay, just the beginning, there are techniques to know when the stock can go from the beginning. It's over. Now it is 85. Even if it can go that much more, you will never know. Okay? So because no one knows where the stock is going. But if you see some stocks have a very, very long trend, the probabilities that the stock will stop going up is always there. So the chance that the stock is going down is big. That's why you should use this kind of probabilities to do or to buy from the beginning, or at least in the middle, but don't buy at the end. And a lot of things happen when people, they watch too much TV. They are in a virtual world, and when you are in a virtual world, some people ask you to do something because they tell you can make money. Now this is not true, because themselves, they don't trade. Understand that. An analyst is not trading, and he will put, if you are going to websites, a very famous website, he will put the information in the notice. He said, I don't own shares. This is, you find it always. It is just his opinion. Okay, if it is your opinion, why you ask people to buy? Okay? Because asking people to buy, and you are famous, for example, someone is very, very famous, and he has power to push people to do something. And this is very, very dangerous in stock market, because when you lose your money, someone very famous, you can't ask him again, oh, why you tell us to buy? Okay, it is just, it is just an opinion that he said in TV or something. He gets millions of dollars to tell you this. He gets millions of dollars. He doesn't care. He doesn't own the stock. Okay? And that's it. So there are a lot of things that have with this trend. So the most important thing is to dig into information, into techniques, because you want to specialize. Let's say, for example, you want to specialize in what we call short-term trading, which is swing trading, which the thing I do. You should specialize. You should have many months, many years doing the same thing until you succeed. Because whenever you know when to buy any stock, that's it. If you buy and the stock goes up, that's it, what you want to do. It's not a big deal. But when you go to that stage, at the beginning, your mindset is always like this. You want a sure thing. Oh, you say this stock, in 1 year, it has gone 200%. Oh, this is a stock that you should buy. Because you rely on the past 1 year or two, and you see the stock has done a lot. You think that when you buy today, in the future, he will do the same as 100%, 200%. This is what you think. But in stock market, it might be the end of the trend. When it is the end, the stock will be going down. And if you are a beginner, what will happen to you, because you don't know any idea about protecting your money or risk, you have no idea about risk, you leave the stock going down. 1 day, 2 days, 2 weeks, 3 weeks, 1 month, and this stock will be eating all your money. This is what happened to most of the beginners who just begin to trade, but they don't want to learn techniques. And you will never be a trader, like a day trader or swing trader, if you don't learn and dig into techniques, practice, try techniques. Okay, try techniques, and try just to learn each day or each week a technique, and you use it and you see if it is good for you. Now, another thing that it is it's the same as what I say, is that, for example, if you go to a broker, you find he has webinars. He will teach you about options, strategies. He will teach you about stocks, futures, but understand that those guys, they don't trade themselves. It's like the analyst who tells you to buy or to sell. It's the same thing. Okay? And this is very, very dangerous when you get bad techniques. And the guy who teaches, he doesn't know what he is talking about, and he has never traded in his life. Okay? and especially those who use a lot of indicators, a lot of things, and the thing. So as I said, try to be careful when you are buying or when you are selling a stock. You should always try to find techniques, practice a lot, and make it as a specialty. It means you focus on only one thing. Don't go, for example, day trading and then you go to swing trading and you can always mix. Now, you can do that, okay? You can. But it's better to specialize in one thing. Because I'm telling you, most of the day traders, they are day traders. It means what is the most important thing is to day trade. It means they wake up in the morning, early in the morning, they see the news, they see what's going on in the whole market. Is it green in the whole market? Before the market opens, they see the Dow Jones, they see futures, they see options, they see everything before 9:30. 9:30 is just they have found some stocks and they prepare themselves either to go long or to short stocks. Okay, so it is a specialty. It means you should be focusing on one thing only. Day trading, for example. Now, if you are, for example, a swing trader, it means a short-term trader. What you should do? You should follow long trends in order to make more money. Long trends. It's not to buy today to sell tomorrow, except when there is, for example, a gap up. One time, I bought a stock called ANAC. I don't know if it still exists right now. It's like a few years ago. ANAC, which is pharmaceutical. I think there are approval of medicine or drug, but I don't know. I just bought it according to my strategy, and the next day it doubled from I think 75. It goes to 135. Just in the morning, I find it 135. I sold. So in this case, you sell because the money that you get is too much to just leave. But in general, swing trading or short-term trading, you should stay days, weeks, or even months in order to make that big money that you are looking for. Okay? So thank you very much. Please, if you have ideas or you have questions, please ask. I'm always here to help you. Thank you very much.